Okay, so in today's video, we're going to go over market structure, and it's important because you're going to learn how to identify a bullish trend, a bearish trend, and consolidation. And that's important because you're going to learn how to use it as your friend. The trend is your friend. And I'm going to teach you what candlestick is, and I'm going to teach you what highs and lows are. So, uptrend, quite simple. Let's get into it. Uptrend. Downtrend, quite simple. Why is this an uptrend? Higher high, higher low. Higher high, higher low. HH, that's not so high, and then H low. HL, higher low. Higher high, higher low, higher high, higher low, higher high, higher low. We're going up. Yes. Downtrend, downtrend, downtrend. Higher low. Lower low. Lower high. Lower low. Lower high. Lower low, lower high, lower high, lower. We're going down. Yes. Simple. And then this one. Consolidation, sideways, accumulation, whatever you want to call it. You don't trade. If you can't tell the bias, if you can't tell the bias direction, uptrend, downtrend, you should not be trading. You are gambling. So we're on the chart, we click line, you can see, wow, there's a nice bullish trend right here on the daily. Let's just go into, I think the daily is like too much. Let's go into 4. So if you go into the 4-hour time frame, we can identify some nice bearish trends. And then we can identify some nice bullish trends. Wow, so bullish. Higher high, higher low, higher high, higher low, higher low, higher. So you know it's going up because it's breaking past previous highs. And then when it's going down, it's just breaking past previous lows. Simple. So next up, what is a candlestick? Because the chart don't look like this. The chart looks like this. Why is it better to look like this? Because a line chart shows you absolutely nothing. Candlesticks shows you 4 data points. For example, right here on this monthly candle, we can see where we opened, where the highest point was, where the lowest point was, and where it's going to close, rather than just one line. So you're getting 4 data points opposed to 1. And my candlesticks are black and purple rather than green and red, so get used to it. So now you know what candles are. That's nice. So you can click on any time frame and see the candle on that time frame. So this is a yearly candle and this is a weekly candle. Within 1 week, this happened. Within 1 day, this happened. This was the lowest point. This was the highest point. This is where it opened. This is why candlesticks are good, just because you can get used to looking at it and seeing where price is. This is disgusting. But next up, highs and lows. So highs and highs, highs, lows, lows. HH. Lower low. High low, sorry. So let's have an uptrend. Higher high, higher low, and then higher high. So how do you identify a high? So I was saying it was just like the break of the high, but what actually is a high? I will show you as candles. So you need 2 candles to make a low and a high, or if that makes sense. So you cannot have a low with a single candle. So this right here is not a low. Why is this not a low? This is a big misconception. Because it's only 1 candle. It needs another candle with it for it to be a low. Why is it? Why have I done that? So you can see here, this is a high. You can see here, this is a low. This is a high. But this here is not a low. Why? Because it's a candle by itself and it needs another candle. But apart from that, pretty much, yeah. Next, I will get into it a bit more in the next video and go over break structures. But that's pretty much candlesticks and market structure, uptrend, downtrend, sideways, and candlesticks.